The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, we're back, and this is the Tiger Technicians Hour, Friday the 13th. We're looking at the Dow down 24, the S&P's down 13, the QQQs are down just 72 cents, and I wanted to go through a couple of things just real quickly. Technical Friday, and we've got a long weekend, so there's a bunch of things I wanted to look at to say how patterns repeat over and over. Remember, I talk about the long, narrow rectangle that if it pops out, it goes to a D or E above that rectangle high, then it can pull back. If it takes out halfway of the rectangle, it's a long, narrow rectangle going a lot longer than your patience can hold. Then what happens is it takes out the left side low. At about 6 o'clock, it was actually just a little before 6 this morning, I was looking at the charts, and we were in the 10-minute chart. We were right here to peak E and pulling back. The 1-minute chart was getting a little toppy. So I said, you know, I had the same thing yesterday at the same time, and it was the same kind of pattern. I drew this in. I said, oh, it's impossible to believe you're at 4,000 and about 4,005 on the E-mini 1-minute chart, and obviously the 10-minute chart as well. I'm just going to draw this in because we've seen this before. So I took my left side, right side price time action. That's bar symmetry. I took the low after that 8:30, big spike, big pullback, big spike, big pullback with a higher low. And that was the low of 10 o'clock at 39.57.25 in the E-mini yesterday. It then went to peak ABCD, pulled back, made a V-shaped recovery. The Groucho Marx eyebrows went to a peak E and then pulled back and then held steady in this rectangle. So I said, you know, I had a question yesterday from someone who wanted to buy puts. I don't know if he did buy puts on the Dow. And I said, the only way I would do it, this was late in the afternoon. And I said, the only way I would do it is if I was looking for a poor close at the end of the day and going into the 8:30, but I said 8:35 time frame, you want to just see a cascade lower because you've still got to wait for the 9:30 opening if you're in options. Anything can happen between 8:30. You could be patting yourself on the back, take your hands off the wheel. That's when you hit the tree because all of a sudden from 8:30 to 9:30, there's the rally we just saw now. We didn't see that, in fact. So I drew this in and I said, look, you've got left side, right side price time match. Let's go to the low right here. There's a little tiny doji candle low of 21.30. So that's 9:30 last night on the 12th. Yes. And just move it to the right. But if I have from the previous peak, and I always, for the Chapman Wave inside wedge, I have a particular technique. If I can draw that and take it to the end of the line of this pink right side down move, the horizontal line, maybe, I don't know, and I'm even watching it and had a little bit of a trade, just and then got out and then watched. And look at this. It came, and we're talking about 24 hours, actually 22 and a half hours, and it comes back to within a point. And it's just 3 bars late, maybe 4 bars late. It goes to a low of 39.61.75. The way the symmetry, bar symmetry works, to me, I can't believe. I mean, we were right here when I was looking at it earlier in the morning at 6:10 or something like that. I said, you know, I think we've gone S. The 10-period moving average has crossed negative. I think we can pull back. And I didn't even take it to this low right here. I took it to the actual low. I said, I've seen this before. And that's really what I was saying. Remember, I said that this week for me is going to be one of the most important weeks in a very long time. And one of the reasons I was saying that is because patterns seem, this as I've noted over the years, that when you get certainly in the Boston area, a snowstorm, as soon as the fall starts and you're getting into the winter itself, as soon as the snowfall forms, if it continues to be repeated, even just 1 week later or on the same day later on, that's the day. So Friday is the day now for snow in Massachusetts. I mean, Boston. That's the way I'm looking at it right now. So these patterns repeat. I always look at patterns that repeat. Now, look what happened in the E-mini. I did the same thing to the upside, the left side, right side bar symmetry, and it got there just a little early, and it broke to the upside. But look, this could turn out to be a 2-click session in the essence that once it crossed positive right here, the 9 went over the 14. Remember the 914 cross right there at 9:16 this morning. That green line has remained in place, and you can stay with that green line even though it's a 1-minute chart. That's going to fail. What I would do is go over to the 2-minute chart and the 5-minute chart to use that as a benchmark, because this one certainly could fail at any moment. But isn't that amazing? From 9:30 to almost 10:15 right now, 45 minutes under the kind of pressure that you think, oh, this could be a really ugly day. But in fact, look what happens. The market takes it in a stride. We're down 33 cents in the Dow, down 14 in the S&P. Okay, let's just get back to the real stuff right now. And what we're talking, I didn't mention that. I'm sorry, I forgot to mention. So this is still on the long side for any position in the E-mini. But look at this, the 10-minute chart. That's only leg B and across positive. And I love the action in the rectangle formation. This is a larger rectangle, which turned out to be a cup formation. And these patterns that repeat, you see the way it made a little trough D, and then it didn't take it out. I'm going to show you something. Oh, well, I remember what it was that I wanted to show you. I didn't write it down because I've been so busy this morning. All right, I'll try to find. No, I don't want to guess. I'll find it as we go through the charts. All right, let's get going here. So the TLT, I was talking about the TLT as the last thing when I did the market update. So the TLT is down just 2 cents right now at 107.74. And that's basically saying that yields are coming down. Yields are coming down. Crude oil is down in the lower range. It's rallying, but it's still stuck in the lower, not even a quadrant. It's kind of an eighth tent or whatever you'd call that, just in the lower range. And it is rallying, but it's kind of stuck there. And if you look at the monthly chart, that 9-period moving average is getting closer and closer to turning negative, but it hasn't. And that's just telling you that crude oil, just for now, together with yields, are in essence a little bit of a help to the market. The DBA, which is we're still on the DBA. The DBA, which is the DBA Agricultural Fund, has plummeted from the 200-period moving average resistance, peak B minus right there. Ooh, is that correct? Yes, peak B minus right there. And failed, did the Eiffel Tower straight up, straight down, and hit 1930. Oh, that's what I wanted to show you. So here's the DBA. I knew I'd get there. At 19.22, the week of July the 22nd, it rallied to a peak A, peak B, peak C, peak D. Remember, in the Chapman methodology, you're looking for a buy signal to be an upgrade to a buy mode to get you to a D. But I do not like Ds that fail underneath, way under the previous high of 23.01 on the week of the 20th of May. So this is a really good rally, 1922 to just under 21, maybe 17%. And then it pulled, well, still long, as I say, and then pulled back. But look what happened. Yesterday, it went to 19.32, 10 cents away from that high, low in July. Now you're going to see whether or not there's strength for a rebound in the DBA, the agricultural fund. But you've had commodities, soft commodities pull back. That helps inflation.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So within the context of, we were looking at I was saying the yields are coming down a little bit. Look at this. Peak D. Look how many Ds we have. Peak D in the, I forgot to put that in. I'll put it in there. Right here in the HGX, which is the Philadelphia Housing Sector Index. Why is it doing so well? I mean, really, under circumstances like this, you would expect that the home builders would just be decimated. High yields, high yields, high yields. And all of a sudden, look what's happening. You got your peak D. That was December, I think 13th or so. Let me just check. It was December, 13th at 431.42. Pulls back quite sharply to retest multi times over the last month or so. The 200-period moving average successfully rebounds off that, starts a buy mode, peak A, peak B, peak C. What did we get yesterday? Leg D. And what did we get today? Just the chance that it doesn't go above yesterday's high of 436.15. We're trading at 433.13. I don't know. It might even do that. But isn't that interesting? Look at the W formation, beautiful W formation, two cups going to a leg E in the weekly chart. Hey, something's different. You've got to look at something and say, under the conditions that we have, we've spent a year having a bear market with a decent rally in some sectors. But the sectors that are working, and now I'm going to go to the question that I was asked about. Bonjour, Mr. Chapman. Is X, that's U.S. Steel forming the large cup and then possible handle you were speaking of. We'll get to that right now, but let me just say that within the context of the SLX, which is I was doing this yesterday, I think it was yesterday or the day before, I was saying, under these conditions, now I understand that money is being put to work in terms of the infrastructure sector, but usually a bear market is a bear market. You don't get out of it until you make a climactic low. We've had a number of lows, not all of them climactic. I don't want to go through maybe I'll do that on Tuesday, or maybe today if I have time. I can show you the chart that I'll just lift it up here to show you for 1 second, and I'll talk about it maybe. Is this the one? Yeah. This is the one that shows you. And I said, is there something different here for the Chapman News Dark News Cloud cover using the Dow Daily chart? I said, is this the internal low and this is the residual low? Are we about to bounce off the downtrend line that it's held so well, is this different to every other dark news cloud cover that failed and went to a lower low? I said, I think so. And that's the reason why we keep buying the Dow and adding to it, especially with the U Dow, the 3 times long. So we're out of that. So look at the cup formation here in SLX. So that's gone to a leg C in the weekly chart above the high that was made right here, the week of the 10th of June at 65.26. 70.43 was the high that was made at a peak C in the monthly chart, but a peak D. Remember, D's are the D. You can go to E, even F and G, but D is where other things can happen. And right here on the 22nd, the week of the 22nd of April, it goes from 70 down to 46, 47. I mean, that is definitely a serious decline. And the cows come back at 65.20. And look at this monthly chart. You see this pattern here. Look at the way there's a slightly higher high in this cup formation and then a second cup formation. Just have a look at this. I just saw this a moment ago and I drew it in. So this is, was it gold? No, it wasn't. Was it copper? No, it was copper. So look at the rectangle formation. It's another technique I might get into. I have to go back to the steel stocks in a moment. But look, you pull back sharp, you got your flag, and then you make higher highs and higher lows, which says you can go to a peak A, peak B, C, and even a D, just under, just above, or right on the previous high. We just did that. As I'm talking, this is live. There was nothing made up. There's no way I could tell you to have that spike to the exact same price of the high that was made at 1 minute past 10 at 1916.7 in the continuous contract. What was the high right here? 1916.5. Amazing, huh? And now maybe it'll pull back because it's peak A, peak B, peak C. I think this is a D right here. All right. What I wanted to show you was the high-grade copper, I believe. Nope. Yes, high-grade copper. You see this pattern here? We made a cup formation, slightly higher high, and now it's going back. Wait a minute. Is this a pattern that I just spoke about? Patterns repeat over and over and over again. Here's the FANAG Vector Steel ETF. So it seems to me, although I have to call this a gray leg B to the upside because the MACD hasn't crossed positive in the monthly, stochastic still weak, on balance volume is good, 9 is over the 14. There's a chance against a backdrop that you would never dream could be happening, that the money that's being put to work in the infrastructure hasn't yet, actually, I don't think it's really gone to work right now, but just the taste of it, the fact that it is coming in, is helping cyclicals. Look at Caterpillar. Caterpillar, all-time high as we speak. Yep, all-time high as we speak. A leg D. No, it's a leg E right here, D. And the reason why I'm going through this panoply of charts is to show you, when I get back to the different steel stocks, that something here is happening that is extremely positive in certain sectors. All right, so here we go. Leg B in the Caterpillar weekly chart. In the Chapman falling ash formation, broke 1-to-1 to the upside. Now let's go back. So now the question was steel, U.S. steel. We are long steel. Look at this cup formation. I didn't even draw it in. I should have drawn it in. Here we go, cup formation. Right there. A little lopsided cup. I call it the gravy cup. So look at the matching pattern. I think Larry calls this the 135, but I've always done this. It's just it's price time match as far as I'm concerned. Look at the way it went from that high of 27.64, pulls back sharply to where? The exact 200-period moving average. Bounces to where? Right underneath the 27.64 level, and it goes to 27.47. What's 20 cents or something, 23 cents or lower. Pulls back, holds the 50-period moving average, and then the 9 crosses positive. 9 crosses positive as the MACD gets stronger. The stochastics favorites at 91. The on-balance volume is good, not overbought, just really good. And here we are. I'm calling this, I could call it F/B, just for the moment. I feel comfortable still calling it a B. So that is the cup formation. Now, in the weekly chart, you've got, now I've done this forever. I know in the traditional way of looking at cup formations, cup and handles, you've got a left side high, something like that, and then you make the cup. I have over the years found that if I identify an ugly candle, ugly down candle, the high of that candle, and in fact, I'll show you right here, the high of that candle can produce a kind of a rectangle that eventually becomes a cup formation, especially if there's a dreaded H in the middle. This one was not quite the same. I'm going to the weekly chart, the 10-minute chart of the E-mini, and I'm going to show you something here. Patterns repeat over and over. You just got to identify them. Look at that ugly candle. Everyone saw it. That was the candle at 7:05 or something, 7:30. Whoosh to the downside. Well, when it turns around, that becomes your benchmark, the high. You remember, I actually put in the rectangle. I'd shown you this rectangle before. That becomes the rectangles. There's your little H pattern. Here's your cup formation, if it's a successful H pattern. And here you are in a huge leg B at -9 at 39.94. So here we are. Let's go back to the charts, real live chart. And here's your cup formation from that ugly candle. And we haven't yet tackled it, and we are in leg D. I'll be back in a moment to look at some of the other steel stocks.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Do the left side, right side price time match. That's bar symmetry here, but let's go to this one, to the middle candle right there. And you can see we went above. This is Nucor, one of the great steel companies. Oh, I didn't mean to do that. There. And look where we are. We in 1 day early, we took out the left side, right side. No, it's 2 days early. We took out the left side, right side price time match. And even more important, it's gone above the high that was made. The little oh, that isn't a double top. That is a double top. That is peak E, and there's F. So this is E. That's why I had the plus sign there. I forgot. And now it goes to F right there. You've got to be so careful. Usually I did see these, but I had already written in from a while back, F. goes in there. Okay, F uppercase on the way up. All right, there it is. So it plunges from 155 down to the 200-period moving average of 130, goes to peak A, peak B, and then makes what? I hope it didn't take out the left side low. That'll make a change. Actually, maybe I should hope that it's 129.47, 129.82. Yep, I thought so. Okay, so there's your dreaded H. Remember the patterns that I may as well do that. I'm not going to rush through this. There's plenty of time. So, the patterns that I look at, when the lowercase h, and I'm going to go show it to you right now if I can find it. Now it'll go take me to my work right there. Here we go. So I'm already looking at three major patterns in terms of just direction. And it's either straight up, straight down, cup formation, or arch formation. That can turn into, if it's a sharp move down and it fails at a peak A or a B and it takes out decisively the left side low, it can go a lot lower. It can go 1-to-1 to the downside. On the upside, if it's green because it stopped at a certain point, came back, made a cup or a V-shaped formation, went back to that point, how it takes it out is going to be really important. The other thing I'm looking at now, I may as well just show it to you, is I was talking about the rectangle. So the characteristics in the Chapman wave of the rectangle formation. The long, narrow rectangle can last a lot longer than your patience. And of course, I talk about, I have webinars. If you sign up for my newsletter, you get umpteen webinars, and they talk about all these things over and over. The difference between the long rectangle, the narrow one, and the large rectangle. So these are things that are important. Also, I'm always looking to identify the lowest low. It's why every time the Dow makes a low, we try to get in at the bottom so that we can have a cushion. It's just so important to have that cushion when you get wild moves. You want to be able to have that happening above your entry price or below your entry price if you're short. And look at this. You go at least to 4 higher peaks in a buy mode. That's your target in the Chapman wave is to go from a buy signal, get it upgraded to a buy mode, meaning you're going to go to a D. At D, other things can happen. The easy part is to go to D. Then it's a little bit more difficult because that's where you can have your sharpest decline. Or if within 3 bars it makes a new high, you can have alternate count and go all the way to a G and maybe even recycle to another 4 peaks higher to D. All right, enough with that. So what are we looking at here? We've just made a leg D. How many leg Ds do we have? This is so important. And a leg D in the weekly chart, there's your... So I'd said in the cup formation or the arch formation, I take it from a very important, what my eye sees as important, in this case it would be here, as the low that I'd use initially. The one that you really want to use, of course, is way up there at that dragonfly type reversal candle. So I go to here and I usually bump up as much as I can against the wall, the Grand Canyon wall on the left side, and I go to the right and I say, where? Now I don't know where it's going to go, right? So I'm going to the right and I say, there's your H pattern. If it breaks down from a peak B and goes below that left side low, that's really negative. But if I took that as a midpoint and it's successful, and I can add to the right side the same number of bars, is it possible that if there's a successful H pattern, oh, I didn't mention that. Let me just do that again. So there's a chance that in this particular pattern right here, if the left side holds, it all of a sudden becomes a big cup formation. And if you close above the arch high, you can go all the way back to the previous high. That's how important it is. So within that context, there are times the rectangle formation can form when it holds successfully by not breaking below that left side low, and then it creates another arch formation. All that's happening is it's going into a long rectangle. All right, enough of that. Let's get out of that. So what are we looking at? In Nucor, there's a chance that these things could happen. I'm doing this. Of course, this is not live. I'm doing it live, but I've already seen the chart. So that I always say, in that particular instance, you've got to just treat it as information that I'm giving you in terms of technique. But the one I did live moments ago, like I did with the gold chart, the gold or copper chart, that shows the technique in real time. So now look at this. Here's your left side. And where was it? It said that by the week of the 23rd of December, we should get to the high that was on the left side, which is this ugly candle right there, the high of 155.18. Well, what did we do? 2 weeks before we actually made the high, and we went to 154.98. Not bad, about $1 or $2 within that. And it made the cup formation. Now this is almost like the traditional cup and handle, one of my least favorite techniques, that and the head and shoulders, because by the time you recognize it, it's too late. You've got to use other techniques to get in before that, and he has your little handle. And the problem with the cup and handle is that, yes, if you know, IBD, the Investors Business Daily, it's one of their major tools, is that if you get it right, and if you're buying, they actually wait for the breakout. But I say, no, that's just too late. You want to get it at the low of the trough. And if you can get it there, then you have a lot of room, because it should go to a D, but then it should pull back and go to the left side lip that you're looking at and go deeper back into the handle. So I'm watching this and I'm saying, so the weekly chart of Nucor says, yep, good action. Oops, uppercase. But the weekly chart, the monthly chart, you can see a little bit of it on the right here, is saying, this is very good action. So that's that. Now let me just go back, because I don't think I quite finished with U.S. Steel. So U.S. Steel, I could call this an F/B. And one of the reasons is, you've gone above peak E, and in the weekly chart, this is a leg D, and it's almost the same move, even though in the daily chart it's pulled back sharply. So that says maybe it's just a continuation of that E, a little bit of a breather, and now it's gone. But everything about it, look, stochastic's flat at 90%. I love that. That's what you want. And the rules in any rule book on technical analysis, over 80% overbought. The implication means it's overbought. It's got to sell off. No, it's great. There's a 1, 2, 3, 4, 5. 5 letters. Great. That's what it is. And if it's down below 20%, poor. It's not oversold. It doesn't mean it has to rally. It means it's poor until it breaks above. So in this particular instance, I am calling it a B. I like everything about it. The 9 over the 14, price way above the 9. The MACD is good. The daily on-balance volume is not overbought yet. Look how it was right there. It gave you that perfect peak E right there, 27.64, as it pulled back. I like what I see. All right, that's all I can say. The week is young. The month is young. We'll see what happens with that. Next question was, did I move too quickly here? Duffy says, look at CX. Oh, Duffy, you just kind of rubbed my nose in it. I mentioned it for a while, and then yesterday I said CX is on our watch list to buy. We've had it before. Look at that move. Leg D, probably a peak deep. And look at that. Mexican cement company. We will not get back into it. We have to wait for a pullback. What a shame. Nice. Right at the 200 period moving average where I saw it. I just had to wait a little bit to look how quickly it moved up. CX trading cyber.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Get back to steel in a moment if I have time, but I had a question about Amazon. So look, here's the Amazon 120-minute chart. Look at this beautiful cup formation, and it goes to a low right here. I would have liked to have used that, but I used this one, which was the exact low of 82.46 or something like that. And then it starts to move up. It goes to peak A and peak B. That peak B goes to B minus because it fails and goes to a lower low. But the MACD had already started moving. The stochastic was already moving, and that said that could be a very brief, and that's a Chapman Roman candle right there on the at 11:30 in the 120-minute chart on the whatever date that is, 6th of January. So now look what happens. The rule of thumb, of course, uses that wick. If it goes into the wick for a shorter period of time, halfway into the lower wick is a good chance to retest the bottom. But if it closes in the next 2 sessions above the high, that's really positive. Not only did it close, it spiraled higher. It went to peak A, peak B, peak C, peak D, above the 200-period moving average. And then it stalled yesterday. It stalled in the 96s area. And what happens is it pulls back, goes sideways. And where's it trading right now? At 96.90. What was the high yesterday? Was it yesterday? Yeah, 97.19. So, and all the technicals are strong. So that's why you've had a rebound from the sideways move within that candle. Now what I do is I draw in a rectangle and I say, okay, let's see how it breaks either above or below, because that's important. So Amazon, this is a single leg A to the upside, still an A unless the day finishes and it hasn't made a new high, then it becomes a peak A. But 81 to 96, 97, that is fantastic. We hope George in Boston is very happy with his Amazon. All right, now let's go to the next question. Where was it? I saw it a moment ago. Oh, that's right. CLF. CLF is Cleveland Cliffs. Flat roll steel trading at 20.77 in leg C. Yep. And watching it closely. And look at this beautiful cup formation. Now, remember I spoke about ugly candles on the left side. What's the ugly candle? Right here, where it not only had an ugly candle, then gapped even lower the following week. It's unusual to see a gap on a weekly chart. You see that all the time in overseas stocks because they trade overseas before trading here. But on a U.S. company, that's a little unusual. And when it gets filled in, remember, I love gaps that eventually get filled in, and then you start trading way above that gap. It says everything that was negative on the way down is now turning slowly positive. So that's really important. And what we are looking at is, I am not yet prepared to say that I want to grab the rectangle for this and talk about it as if that's where we're going. But I do like to have the rectangle in place to say, that's the candle. You have to get into the body of the candle, halfway into the wick, which we're not yet in, which would be 21.90. Sorry, no wicks. There's just a little wick at the top. So 21, let's call it 22. It's at 20.81. On any weekly basis, if there's a close above 22, there's a really strong chance that the next objective will be the high of that ugly candle of the 10th of June at 23.91. What's the support? all over here, you've got 18 to 17. Let's call it 1870 to 18, maybe 1780. That's all support right here. That's a big percentage, 3 points, 2 points, 10% down risk. But this is what it's looking like. Okay, done with the steals. Next thing, done with the steals, on with the, banks. XLF. So XLF has gone from the low that was made back in mid-December. It made a peak D. How many peak Ds have you seen just today alone, huh? Unbelievable. It goes to peak A, peak B, C, D, and then it squeaks to an E with a doji candle. Today is pulling back. So we've got some earnings, and I don't know exactly which. I thought Bank of America was usually the last of the banks to report, but they reported today. We've been out of Bank of America for a while. One of the reasons is we've had it every year for a good rally to the upside, and then we get out and we wait, then get back in. This year we did not get back into Bank of America. I didn't like its action at all. Once we got out, I said, well, not this year, this past year, I said, I'm not happy at all. And it's trading down 39 cents to 34.09. What I did say to subscribers is, I really like bank. It's a terrible symbol, BK, Bank of New York. For a bank to be called, to have a symbol of BK, which is basically bankruptcy, is not a good sign. But look, it's gone quickly to a peak D, peak E, peak F, so there should be some kind of a pullback. It's done very nicely. I just didn't know when to get in. We had other positions that I wanted to get in that I felt were better. I'm not that happy with the financials, and that's kind of the missing link here. So it's terribly selective, because if I had a question about ZTS, as I wanted to know. So we had this as a position a little while back, and then I said, no, we're not taking any chances, and we got out of it as it was making. Was that a peak D? I can't remember now. Yeah, it was that peak D. It went right to the Chapman Wave Inside Track repellent zone. It's amazing how the market might not know it, but the chart knows it. Look at that Inside Track repellent zone. Peak D pulls back, makes another peak A, B, C, D, pulls and stops right there. So Zoetis Inc. produces medicines and vaccines for pets and livestock. I think this is a great stock. I'm just very disappointed, because my theory has always been pets and beauty. In bad times, those are the last things people are going to give up. So I'm a little surprised that it isn't high, that it gets repelled to the 200 period moving average, but I like it. And if you're a long-term buy and holder, it is at peak D a leg D right now. I would say at 160, somewhere in 153 to 151. Give me a yell, let's have a look at it, because that's where I think it could start the next move to the upside. I do like it longer term, not so much for chart formation, just because I think it's in an area that should see at least consistency in terms of earnings. Maybe the worst is over. It's not going to get much better, but that's the way I'm looking at it. But it is a quick leg D in the weekly charts. I'm just going to say I like it, but I just risk-reward wise, I'd much prefer to maybe pull back. Maybe if you're looking at options, you can buy a 165 option. It's trading at 160.25 and make it February. I'd go out maybe even March, just so you've got time on your side. All right, so that's the Zoetis. Mo is a question. I haven't looked at Mo for a while. I had it all notated. I wonder if I've lost all I've notated it ever since I began charting. Yep, all gone. This is so disappointing. I don't know how many times. Look, so there's your low back in March. I think it was 2020. It goes peak A, peak B. No, that should be, let me just check that. That's it. Yeah, that is. So that's 43.15, 43.20. Nope, that is A, peak B, peak C, and holding. Yeah, it's. So this is this is Altria. So this is the Philip Morris and Altria group. This is the Mo is the one, and Philip Morris is PM, I believe. Yeah, that I've done. Philip Morris holding. I think out of the two, I think Philip Morris is more the tobacco, and that Altria has to do with the other parts, the foods, etc. But forgetting any morality, I know some people will not trade in any circumstances, will not touch these tobacco stocks. I say You're in this business to make money. You can have morality, or you can make money. If you want to get moral, then you've got to look at all the factors on all the companies. But I've avoided these for a lot of reasons. I don't need some subscribers in and some subscribers out, so I just avoid them. But Philip Morris is the better one out of the two. All right, I'll be back for the final segment.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So someone said, oh, I also missed the CX because it was mentioned as CMAX. But look, I have this list. Even as I'm speaking, it just got updated a minute ago. And what do? Look, I drew in a leg B right here for the stock AUPH. Arenia Pharmaceutical Inc., autoimmune therapies. And I love the way it gapped up and it held. That was a really good sign. I thought, what should I do? What should I do? Look, it's straight up. This leg B is still a leg B, although I would have made that double top there, exact double top, at least for now. I would have made it a phantom peak. And now it would be in C, but actually it's really in B. I'm going to call it C. Isn't that incredible? What do? Well, I have a theory, and I'll talk a little bit about it tomorrow, that we're going to actually start implementing now. I've avoided it because we're trying to get some core positions that are part of the makeup for the portfolio that I'm hoping that we can have for at least this quarter of this first 3 months, at least the first 2 months. And so I've focused a little bit there. We do have the opportunity of single-digit stocks. We just missed one that's now moving just exactly the way we wanted. We missed it by a little bit yesterday and the day before. Anyway, so look, what do? We've got tons of these. Look, here's a stock we missed before, MIR. I spoke about it here. Did I type in the wrong place? I probably did. MIR. This is Mirion Technologies, Inc., detection, radiation, analysis, monitoring, nuclear defense, medical resources, and products. So look at this. Spikes up, goes to the 200-period moving average. We did have it for a brief moment at 665 with a tiny loss. In fact, we just barely got stopped down, and then it moved higher. What do you do? Well, there's certain methodologies that you can use, and I hope to be able to implement some of them now, because they are starting to show that they are in areas that are in demand, and certainly in the microbiotech. Just, it's amazing what they are doing. So with that said, I'm going to say have a wonderful, a long weekend. Check out my opening call, my daily newsletter, and we will see you again on Tuesday. And stay tuned, because Steve Rhodes recorded earlier on, and then great programming continuing all the way through to Tom O'Brien, wrapping up at